I never believed in the hedge against inflation because that's so long term. Bitcoin needs to be around for, I think, decades before that happens. It's still just a baby. It's just evolving. It's so early days. It's such a small portion of global portfolios. But as far as a potential hedge against banking issues, yeah, I mean, it's coming up there like with gold and treasury bonds. Now that's just a high beta, high risk version, but I think it's people are realizing, wow, I really probably have to have some of this, particularly if I'm looking to get away from risk assets like the stock market. This Bitcoin stuff is, if the stock market, if risk assets do recover, it's probably going to outperform.
According to Mike McGlone, a senior commodity strategist at Bloomberg Intelligence, the next cryptocurrency bull run might be sparked by the banking crisis, with Bitcoin surpassing all other cryptocurrencies. According to McGlone, as major banks fail, investors' faith in conventional financial institutions is eroded, making Bitcoin a more alluring insurance policy against banking risk. According to McGlone, the United States Federal Reserve's refusal to loosen monetary policy in the face of the financial crisis is what is pushing the American economy into a recession. He thinks that in the end, Bitcoin would perform better than any other cryptocurrencies due to this macro context. Now let's watch the video. Please like, subscribe, and leave your thoughts below.
Bitcoin was born out of the last significant financial crisis, or the Great Financial Crisis in 2008 and 9. And I think it's in the process of defining Bitcoin of global digital collateral. Now that's the current state. Bitcoin has done very well, bouncing back above $25,000 resistance. At the time we're taping this on Wednesday, it's around 27,000. While the stock market still is under pressure. And I think what's happening is we're seeing a significant rally in Bitcoin this year, up to about 73%. Obviously, it was too oversold last year, but partly because people are realizing that it's becoming more like gold and U.S. Treasury bonds, but just a higher beta version of gold. And it's gaining accolades as maybe not as so much a store of value yet, but as global digital collateral in a world that's going digital. So this financial crisis is quite significant. It's defining, and I think people are realizing one thing about Bitcoin, it's no one's project and no one's liability, and it's completely independent like gold. The thing is, it has that definable diminishing supply, and it's so low as far as adoption in so early days. And this seems to be the trigger. The banking crisis, I think, when people realize, oh, my money may not be so safe in a fractional reserve banking system. It might be safer in a fully collateralized stablecoin or crypto dollar. It seems to be hitting that inflection point that I've been looking for a while. I'm just kind of, deer in the headlights watching, wow, is it really finally happening? This is an overwhelming, rapidly advancing technology, and most astute, smart people in this country get it. Some don't. They might be incumbents in power. But like all the major changes in history, even like the key thing, the development of euro dollars, that was not really, the trading of U.S. dollars offshore in banks was not really supported by the U.S. government. But we're seeing, I think, this just overwhelming. So I think, I don't know where that's going to go. I do know if the current administration continues to push back, they're likely to be voted out in 2 years anyhow, like a chairman of the SEC's, but have 2 years left. And I don't know really how to define that so much, but it just means that it's going to be a pushback in the shorter term, but in the bigger picture, it's really going to be hard to stop this technology. They hiked rates again. The ECB did a week ago, 50 basis points, and it's probably the last hike. The market's already pricing for easing, a little bit of easing, not a lot yet. But the bottom line is they're potentially tilting us towards a significant recession, potentially depression. I mean, the hike into, you can't be a hawk in a bank run, is the quote from my colleague Tom Orrick. He's our chief economist. And he wrote that a little while ago, and they just did. They hiked and we were having a bank run. So the ECB, this is a global bank run, and it potentially this country is just getting started. Remember, it's basically only been a year and 1 week since the first hike, the most aggressive hikes on a global basis ever. And there's this rule of long and variable lag. So what I see is the bank situation is a tree in the forest of what I've been pointing out for a while. Commodities collapsing. Now, this just not getting started because everything is tilting towards recession except things like unemployment. and unemployment can only go one way. It's so low, it can only go up, which means the recession is virtually guaranteed. You look at things like the yield curve. So I think the Fed is just way far behind, like they were so far behind in inflation. Now that inflation is potentially collapsing, and I'll point that out in a second, the leading indicators, peaking housing, the banking crisis, commodities, means they should have stopped, and they still hiked rates. So I fully see, looking forward, we're going to have official acknowledgement of deflation, other from government statistics, not from forward-looking things like commodities, and the Fed tightened rates. So they're so far behind. The key thing we're going to end with, we're going to find out with and get, is now by this time next year, Giovanni, when we're talking, I'm pretty sure we're going to be talking about a significant enduring deflationary forces, the Fed not easing with the ease that it has in the past. I think the answer is yes, it's kicking off a next bull run, but it's very much subject to the ebbing tide of the stock market. We're talking right now with the S&P 500 around 4,000. I fully expect it to go to 3,000 in a recession, a normal recession, which is predicted the highest probability since 1982 from the yield curve. And that's going to be a pressure factor on Bitcoin. But potentially we're hitting that inflection now, where this recession is going to be great for things like gold and long bonds. And the thing is Bitcoin in there? I think it's hitting that, but it's just hard to say for sure. But I think the more the Bitcoin can sustain above 25,000, and the more the S&P 500 potentially pressures below 4,000, you're going to have an indication that Bitcoin is just going to take off. And we have to get there. It's funny, it's a unique that the problem with the fintech and the new technology was the old guard technology, it's deposit in the bank. And that's the extent that it dropped because of the potential that its bank deposit, which was fractionally reserved, was not safe. So what it's proving is these fully collateralized crypto dollars potentially are much safer than banks. There's no FDIC insurance needed. It obviously needs regulation. That's just a matter of time. It's how the U.S. regulates it that's going to matter. But it's happening offshore. Things like we've seen a major move away from USDC back towards Tether. Tether is the biggest one. It's controversial, but I've been just following Tether since it was around 2 billion back in 2018, and it just keeps going up with bumps in the road. Why? Because I think it's like what happened with Eurodollars about 5 decades ago, when entities needed access to the dollar away from the U.S. banking system. They did it in banks outside the U.S. and created Eurodollar system. This is happening in crypto dollars. It's happening fast. The technology is overwhelming. It hasn't been. I think we're at the stage now that Bitcoin's going to outperform virtually all crypto assets if my base case of a severe global economic reset or recession pans out. That's my base case, and I think Bitcoin will continue outperforming. I see Ethereum right now stuck between 1,000 and 2,000. Now it's at 1,700. 2,000 is very good resistance. It is the base layer for tokenization, crypto dollars, and things like that. But now we're in that stage where I think, if I'm correct, the stock market goes closer to 3,000, the S&P 500, and gold and treasury bonds outperform in this significant recession in the U.S., then I think Bitcoin will outperform virtually all cryptos, including Ethereum. That's been the case so far this year. It's the existing trend, and I think it's going to more likely accelerate. So we have to get through this bump in the road, and I think the bottom line to remember from my standpoint as a strategist, it's my duty to warn people when I see a hurricane coming. I see a hurricane coming economically, and that's just based on what you see, we spoke about earlier, and it's central banks tightening, despite a bank crisis, and despite forward-looking deflationary forces. Bitcoin will probably be the best performer among the cryptos, including Ethereum.
Following its most recent policy meeting, the Fed implemented a 0.25 percentage point interest rate increase, expressing caution on the recent banking crisis and signaling that hikes are about to come to a stop. While a 25 basis point rise was generally anticipated, Fed predictions call for just one more boost this year. After a series of larger rate hikes were enacted throughout 2022, the decision resulted in the second consecutive quarter-point increase and the 9th consecutive interest rate hike. What do you think of Mike McGlone's analysis of the role Bitcoin played in the bank crisis? Post a comment below with your thoughts to let us know. Don't forget to like and subscribe for more videos from us, so enable your notifications too. Many thanks for tuning in.